Welcome to Markets Now. I'm Michelle Rook along with Brad Koima with Koima Varlake. Well, we're down in everything but nearby hogs this morning. And Brad, I kind of joke with you before we went on about how kind of a risk-off day here, obviously. And is the cattle market reacting to that, or is this just, the bull markets need to be fed every day? Because we're seeing a correction despite higher box beef values and lower corn.
Well, the thanks for having me on, Michelle. This is fun for me anyway. The cattle are always in the splash zone, right? And whenever there's a macro or a uncertainty, you've heard me say it 100 times, uncertainty is bearish. Is it fair? No, but it just is what it is. And I think that's reality. So I think that's part of it. But I think your second point is probably maybe spot on. We've been in a sustainable market. We're at record high prices, and you need an engine that big needs a lot of fuel. It's the old saying, you got to, feedable good news every day. Well, that's a little bit of maybe an exaggeration, but a market like this does take some energy to maintain it. Now, you've got a packer that's getting serious here the last several weeks now about kill cuts. Last week's kill 603, 40 some thousand less than a year ago for the same weight. The packer is going to try to back some cattle up here, it looks like, so he can gain some leverage back. We are still extremely current, and we can weather some of that. But of course, that's a concern as you're looking ahead, for at least if you're a fundamental analyst anyway. Cash market last week was, I guess I'd call it steady. I was a little disappointed because I thought maybe we were going to be a little bit stronger here in the north, but steady-ish, right?
Right. And let's talk about negotiated totals. What did I see? Like 71,000. Some of those were bought for time or with time. And so what are you thinking this week as far as showless or bigger? So will that give the Packers a little leverage or not?
Particularly bigger in Kansas, where there still seems to be a pretty good supply of cattle. And not quite as, I'd say a little snugger supply in Texas, and the show list up in my backyard here, a little bit bigger than they've been too. Been waiting for this little bubble in the show list up here. I mean, typically this is when we'd have a lot of cattle, long-fed calves, right? Calves that the traditional farmer feeder would buy in the fall. Not burdensome by any means. And your note about your comment about the negotiated trade, a little more on that 15 to 30 day slot. So you can see, I think a packer that's still willing to reach out. I don't necessarily think when a packer's trying to reach out to buy cattle for 2 or 3 weeks, I think that's actually friendly. Because I think if the packer thought he could buy them lower, he'd buy them hand to mouth, instead of reaching out like that. There has been some 188 traded here this morning to one of the regionals, which is fully steady with the best prices of last week. So on a Tuesday, that's not too bad.
All right. Technically, where do we need to hold here in the October contract?
I think that there's some quick moving stops under 180, which is the low of the day. Then you're going to catch up to the 40-day, which held us 2 weeks ago on the break. So I'm not sure that a quick break to 179.5 in the October isn't maybe going to be bought a little bit. I personally would prefer to buy any other month other than October. But just because I think that there's a supply of calves going into that slot. And if we don't stay quite as current as we have, because feeder cattle are high, corn is cheaper, doesn't cost $1.85 to feed them. I mean, I'm just repeating things that I'm hearing on my side of the telephone from some of the producers. But so I think that kind of a flush would get bought. I mean, the funds, it's worked to buy it for months. And that's the way a fund trades. As long as you're still in an uptrend, they're going to buy breaks. And I don't want to make it sound like I'm all of a sudden bearish and climbing on a window ledge. I just think maybe the market is due for just a little bit of a pause.
Yeah, and the funds have shed some of their long position here, understandably. Okay, sure. Hog market. We saw the August go off the board yesterday, big discount in the back months, or what, even the October spot month now. So what does the market do with this? We're bull spreading this morning. I guess that's understandable with that discount, but
record or near record discount as the August goes off. But guess what? Every trader that trades hogs has a quote screen. They know that it's a big discount, and Octobers are still where they are, and Decembers are even lower than that. My pat statement on this usually is, in the hog market, I would prefer to sell discounts and buy premiums. I know it's crazy as that sounds to some, but
you always tell me it's too obvious.
Well, yeah,
it's too obvious.
Exactly. I mean, if this was easy, it's not. the fundamental side of the thing. So you got this China economic news, right? And part of the reason we'll probably talk about that when the beans, it doesn't look like things are all rainbows and balloons over there after all. If that slows down any kind of export business with pork, it is absolutely critical. That demand has to stay perfect with the kind of supply of hogs we have. And when you're given a look at what looks to be an increasing supply to us, at least, based on what this availability and the supply of feeder pigs has been here for the last several weeks and months. The next move on the product, they tell me, is lower, but you can hear that I'm a little nervous about the market, but it is a big discount. But mark me down as bearish anyway.
Yeah. And the grains, as we said, kind of setting back here today, is that a result of the crop ratings being better than expected yesterday, especially for beans, or is this China economic news?
Well, you're catching me cheating here. I'm watching my screen here. I'm afraid
and it's probably creeping back up. Soybeans are creeping back up there.
No. December corn is right down to the lows here. I'm wondering if I flush that 480 or not. 480 and a quarter last, and I got this triple bottom at 480. Looks too obvious there too, doesn't it? To your question, no, I think you're trading China news. I think you're trading crop ratings improvement, 5% on beans. That's a chunk for the middle of August. But anybody that has got dirt on their boots would say, well, yeah, if you just had 2 inches of rain, or here we had 10, which is plenty, but 5, 6, 7 inches of rain and through a lot of this, Iowa area here, it does set you up for much improved bean yields from what we were looking at here a couple of weeks ago. So I guess I'll buy into that. I don't know if we can hold the 480. If it was October 15 instead of August 15, Michelle and you and I were visiting, I'd say, hey, let's bet that we hold this low. There goes the low on the D scoring, 479 last.
Okay. That held yesterday. We bounced off of it. We've been talking about that 481 July low for a long time here, haven't we?
For sure. Yeah. I'm worried there could be a little leg down. I don't think it's a big move to the downside, but obviously we'll have to deal with the new low, and the bean thing to me still has a little bit of room below it just because they look plenty high price compared to the rest of the grain complex.
Let me ask you about China in general, though, with the economic news coming at us as negative as it is. How concerned does the commodity sector need to be? We've already started to back off of China being a major importer for us, or export customer.
I've been made some statements before about different things that if China's buying, that's all you need to know. And obviously that's an exaggeration, of course, too. But they are a critical trade partner, and it's not just soybeans, it's pork, and it is also they're a very important player in the beef. If you guys look through that first 6 months of the year data that was available here a couple of days ago, we've seen a bit of a slowdown, unfortunately, in the beef. Not dramatic, but a slowdown. We've been a net importer the last couple of months of beef, which is disappointingly disgusting. We got to be dialed in. Now, having said all of that, China is a situation also where, how jaded I am about, if they say black, I have a tendency to believe white is the right answer. Sometimes the information out of there is a little bit misleading and self-serving, but I don't know how that economy can be that great if you think about what COVID did to our economy and where they're at in their fight with COVID. So let's be dialed in. Anything that we export is vulnerable to a little bit of negativity because of them.
Yeah, I saw that export-import data. That was specifically why I was asking you if that was a long-term something that we needed to be concerned about. So thanks for chiming in on that. All right, Brad Koyma with Koyma Varlik. That's Markets Now.